Hi, you guys. I'm Phil Town from Rule One Investing. And today I want to talk to you about Alibaba stock and what Charlie Munger is saying at one of his most recent interviews. It's pretty scandalous stuff. Alibaba, which has a symbol BABA, BABA, that stock has had some pretty big talk in the market lately. The price has gone down dramatically as a result of crackdowns on tech companies by China. People have been referring to it as the Amazon of China, right? Because of its crazy growth trajectory, 24% a year. Charlie Munger has been very optimistic with Alibaba, very positive about where the company's going, and purchased $40 million of the stock earlier this year through his Daily Journal Corporation. It's his biggest Daily Journal position. I think it's about 12%. But man, that position was in the red at the end of June, just marked to the market, right? Doesn't mean he was losing money on the company long term, but marked to market, that thing has dropped about 16, 17, 20% since the Chinese government tightened its regulation on domestic technology companies. And I want to dive into one of Charlie's recent interviews regarding Alibaba stock, and I'll tell you a little bit about what I think of it, where I think it's going, and we'll see what he says. All right, here we go.
You and your friend Li Lu have been very optimistic with respect to investing opportunities in China. BYD has performed spectacularly for Berkshire since its initial purchase in 2008 and is currently valued at $5.8 billion. The Daily Journal recently bought a large position in Alibaba after founder Jack Ma had been reprimanded by the Chinese Communist Party and Ma's other company, Ant, was not allowed to proceed with its IPO. What are your current thoughts on China and whether the communist leaders will allow businesses with strong leadership to flourish in decades to come?
Well, I think that the Chinese government will allow businesses to flourish. It was one of the most remarkable things that ever happened in the history of the world when a bunch of committed communists just looked at the prosperity of places like Singapore and said, the hell with this, we're not going to stay here in poverty, we're going to copy what works. And they changed communism. They just accepted Adam Smith and added it to their communism and said, now we have communism with Chinese characteristics, which is China with a free market with a bunch of billionaires and so forth. And they made that shift. They deserve a lot of credit. Warren and I are not quite as good at that as changing our minds in many cases.
Yeah.
And that was a remarkable change coming from such a place. And of course, it's worked like gangbusters. It had this enormous growth in the average income of the average Chinese. They've lifted 800 million people out of poverty fast. And there was never anything like it in the history of the world. So my hat is off to the Chinese. And I think they will continue to allow people to make money. They've learned it works. The Chinese, I loved what the guy said in the first place. I don't care whether the cat is black and white as long as it catches mice. That's my kind of talk.
Well, that is Charlie's kind of talk, and it was coming actually from the leader of the Chinese Communist Party back in the 1960s, late 1960s, when he decided to bring in the model that was created by Lee Kuan Yew in Singapore. And so I do think actually Charlie is wrong that this event in the history of China is the first time that's ever happened, where a country has gone from poverty to relative wealth in an extremely short period of time. Actually, the model for that was Singapore. Lee Kuan Yew took the company from middle 1960s from absolute poverty, one of the poorest countries in the world with no natural resources, and had been a colonial nightmare for a long time under Great Britain. And he took that country into becoming one of the top 10 wealthiest countries by GDP in one generation. And the Chinese leaders saw that happening. They saw the first 5 or 6 years of that happening and recognized that what Lee Kuan Yew was doing was a combination of authoritarian leadership. Very strong leadership is one way you could think of it. Another way you could think of it is fascism, which is what Lee Kuan Yew was regularly tasked with being. And I don't disagree with it. I think that was a fascist government. Now, this is classical fascism, by the way, not just sort of, Nazis version of it, which is horrific. But the classical fascism that was very popular in the 1920s, and a lot of people thought it'd be a very effective kind of government where you have strong authoritarian control at the top and a capitalistic system underneath that promotes the independence and creativity of the people. And in fact, most major countries are moving toward more and more of that model. I mean, look at what the United States is doing in terms of being centralized from the top of the country in ways that were not even thought of 100 years ago. So same things to a degree happening here. It's happening in China where, but of course, it's not happening nearly the degree in the United States that it is in China and Singapore, where they have full control of the press, full control of dissent. They run their political opponents out of the country or worse in order to push this through in a hurry. And that's, I think, what Charlie's point is that these guys are willing to do whatever it takes to bring their people out of poverty and into an economic condition that is, middle class. And they're doing it with some pretty hardcore tactics, but he doesn't see that they would suddenly turn around and stop doing it. So I agree with him on that. I don't think that there's anything indicated by what China's doing with regard to any of this tech crackdown that we don't want to do in America. We would like to do the same thing. We just can't do it as quickly. And the fact that they can do it very quickly was sort of shocking to the markets. But I don't see any way that any of this would result in Alibaba becoming a smaller company in 10 years than it is today. Here's what I think about Alibaba. I would take a very hard look at it. I think you should do the work. I don't think it's a 6-inch bar. I think it's something you really have to work at to jump over because it's in a different country. It's a little more difficult to get your head around the structure of ownership there. But I think it's doable, and I think some very, very good investors are moving into Alibaba. So I think it's something you should take a look at for sure. So now I'd love to hear from you guys. Have you or will you be thinking about buying stocks in China, Alibaba in particular? What do you think will happen through the rest of the year or out into the future with this company? So leave a comment below with your answer. I'll be sure to follow up with you, and thanks for watching. Now go play. Hey, you guys, if you enjoyed the video and you think it was valuable for teaching you more about, looking at China and Alibaba stock, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen for a free gift. And thanks again for watching.